Let's do a quick review about those intangible assets. Now, as we learned in our prior chapters, tangible is anything that we can touch. So this would be things like inventory, equipment, desks, furniture. However, intangibles are things that we cannot touch, but we know that they do have a value to us. So one thing to keep in mind about our intangibles is that it's going to include any purchase price plus any additional fees that are incurred. Now, these can include things like legal fees or broker's fees or any government registration fees. All of those different additional costs will be lumped up into the debited amount of the intangible asset. Now, if a company purchases that intangible asset via stock, well, how are we going to figure out the actual cost that we are going to debit to the intangible asset? Well, a few things to keep in mind. We might know the asset's own fair market value, or we might know the fair market value of the stock. So if either of those are more clear, then we will use that as our debit to the intangible asset. Now, some other things to keep in mind is that there are a couple different types of intangible assets. The first type are those that have defined lives. So in this case, we know exactly how long they are typically going to have a life on our books. This can be things like patents or copyrights. Now, in this case, we need to be sure to check to see if there were any impairments. Pretty much whenever we think that there has been an impairment. However, the second type are those where the intangible doesn't quite have a defined life, such as goodwill. Goodwill can live on indefinitely. In that case, for goodwill or any other intangible asset that has an undefined length of life, we need to be sure to check those annually for any impairment losses. Now, let's take a look at that first type. Now, when we do go ahead and check for impairment losses for the first type, there is typically a two-step process. Now, the one thing that we really want to remember is that typically with this two-step process, the first step is to compare the undiscounted future cash flows and see if they are less than the asset's book value. Now, if they are, then we can proceed to step 2, which is to record the impairment, which will be equal to the difference between the book value and the fair value of that asset. Now, for the second type of intangibles, those intangibles with an indefinite life, there's really only one step, which is to compare the book value to the fair value of the intangible asset. And in that case, if the fair value is less, then an impairment has been identified and we get to record it for that difference. Now, the next thing I'd like to speak about is our patents and copyrights. Now, patents are generally just those rights that are granted by the US that give the holder the right to use something or manufacture something or sell a specific product or process. And typically these have a life of 20 years. Now, keep in mind that the cost of the patent, just like we talked about in the beginning with those intangibles, we have to include any additional fees that are involved with getting that to fruition, such as registration fees and purchase prices and broker's fees, attorney's fees. Now, once we actually have that patent, we get to record something called amortization, and this is the case with many of these different types of intangibles that we are going to be talking about next. Patents actually get to be amortized, and they're typically done over a straight line method over its full life. So let's say that we have two companies, and one company owns a patent, and this patent has been in its hands for the last 5 years and it has been amortized for 5 years. Well, what happens if company 1 sells the patent to company 2? In that case, company 2 will only be allowed to record the patent or amortize the patent for the additional 15 years of its life. So keep in mind that when you purchase a used patent from someone else, the life of the patent does not renew. You only get what's left of its life of that 20 years. Now, there is also the possibility where it's legal life. might be longer or shorter than its actual life where it's not expected to be alive. So we have a legal life of, let's say, 10 years. However, we only expect this patent to be valuable for additional 5 years. In that case, we have to go with the lesser of the two and only amortize it for the additional 5 years. Now, another thing to consider is that sometimes patents go to court. And in this case, if a patent goes to court and we successfully defend the patent, we get to continue using the patent as our own. Then we get to go ahead and incur those legal costs and add them to our assets. And in that case, we have to amortize those legal costs over the life of the patent. Now, there are some other different scenarios that might occur when we are defending a patent in court. If we do not successfully defend the patent, then there's a few things that we have to record. One, the court costs will be automatically expensed. We do not get to amortize those over the life of the patent because the patent is no longer ours. And also, if we did not successfully defend the patent in court, that means that the patent is not ours and we have to remove the patent from our books. This will be a debit to amortization expense and a credit to patents. Now, keep in mind that there are also another type of intangible that we like to talk about, which are copyrights. Now, copyrights are typically those that are used for songwriters, artists, general writers, and those are more have an artistic quality. And so therefore, legally, the right for this artwork or this song or this book, legally, that right spans the author's life plus an additional 70 years. However, sometimes the economic benefits of that copyright will not last so long. So we do want to kind of estimate the copyright's economic life and then amortize it over that period if it is less than the author's life plus 70. Okay, next let's talk about those leasehold improvements. Now, leasehold improvements occur whenever a person or a company is leasing space and they make some improvements to that space. Now, you can think of this like a McDonald's that is leasing out a building, which typically they do tend to own their own buildings. But if they are leasing out a building and they do significant improvements to the space, those leasehold improvements actually go back to the owner of the property once they vacate the premises at the end of their lease. So in that case, leasehold improvements are actually considered intangible assets, and we get to amortize those over the life of the lease or the life of the improvements, typically whichever is shorter. Next, let's talk about those franchises. Now, when we have a franchise, we get to go ahead and capitalize the initial franchise fee. And that initial franchise fee then gets to get amortized over its life. However, if there are any additional annual franchise expenses that are incurred over the year, those have to be expensed as they are paid. So just to recap, initial franchise fees, when we first start the franchise, those can be capitalized. That's kind of like a startup cost. And then they are amortized over the life. However, for any additional annual franchise fees that are paid, those have to be expensed as they are paid. Now, next, goodwill. We're not going to get too in depth with goodwill, but I would like to kind of get us started on exactly what goodwill is. We could really have an entire separate video on goodwill alone because it's such a interesting concept, and it's actually one that continues to change according to what FASB kind of learns and adjusts over the years. So goodwill is essentially those additional amounts that are paid for a company when another company is being purchased by someone else. It's those additional amounts that are paid, and it typically reflects brand loyalty and any additional just perks of owning that business. Because keep in mind, when you first open a company, not only are you building up that company in general, but you're also building up this customer base and you're creating a brand and you're getting that customer loyalty. So a company is actually worth typically a little bit more than its book value, its net worth. So when a person considers buying one of these companies, they will usually pay more than its book value. And in that case, the buying company gets to record some goodwill. Now, as I said before, goodwill has an indefinite life, so whenever we have those intangibles with an indefinite life, we have to consider an impairment every single year. So we always test for impairment. And if we do find that the fair market value is less than the book value, then we get to go ahead and record an impairment loss. Another thing that we want to consider is that goodwill may only be recorded if an actual purchase occurs. So if there is an offer that is significantly higher than the company's book value, that does not mean that we get to record an actual debit to goodwill. This only happens when a purchase has taken place. Also, keep in mind that whenever we look at this, we also want to consider the company's earnings over the year, and that's typically what happens when we are really analyzing what's going on with our goodwill. Now, as far as research and development costs, in the past, we were able to do some interesting things with them. However, now, since 1973 and going forward, all research and development costs must be expensed, and they must be expensed in the period that we actually incurred them. So we do not get to treat these as an asset and amortize them over the life or the expected life. So any R&D costs that are created are automatically expensed in the period that they are incurred. Now, keep in mind that there are a few exceptions to this rule, kind of like we have to really consider what the term research and development means. So if this is something that's not really research and development, then yes, we might be able to go ahead and capitalize that. For example, if there's something like a routine ongoing effort to refine or improve an existing product, that would not be considered R&D. R&D is typically for new products and finding applications for new research findings. Those are R&D. However, if we are actually just doing ongoing maintenance of something, those are not considered R&D, so they do not typically have to be expensed depending on the scenario. Also keep in mind that if there are materials or equipment or any other intangibles that are purchased and we consider those to be used for R&D activities and nothing else, those are considered to be R&D costs, so we have to expense those immediately. However, if we do find that we are purchasing materials, equipment, or intangibles and they do have an alternative use, then we can go ahead and capitalize those and gradually depreciate them if they're tangible, or amortize them if they're intangible. Now, also, let's consider those deferred charges. Now, just really briefly, deferred charges are those are typically things like plant rearrangement costs or like a real big long-term prepayment of insurance. So just a really quick example for this one. Let's say that we purchase a 5-year insurance policy for $5,000. Now, that first $1,000, that will be our prepaid insurance. However, anything beyond a year, that additional $4,000 that we paid for, that would be considered a deferred charge. And last but not least, I want to talk about those computer software costs. Now, computer software costs, those actually cannot be capitalized, and they are considered research and development and, therefore expensed, until we find that they are technologically feasible. So once technological feasibility has been established, then we can start capitalizing those costs. However, any costs incurred prior to determining that the software is technologically feasible, those will all be considered research and development and thus expensed. So if you have any additional questions, this is just a brief introduction to those intangible items that you might be seeing in your accounting course. If you have any questions, please feel free to leave those below and we will be sure to address it. And if you have any recommendations on any videos you would like to see that would really expand on these topics, please feel free to let me know.